Trading a reversal is like trading a second strategy. That means when you have 10 trades and you want to force out a winning trade, it's important to stick always with either trend trades or reversal trade, and this is how you can improve your trading. Here you can see a bit of a reversal trade here, and here you can see between a lot of green candles, trend trade. The student here made $2,393. As you see here, had 22 winning trades, 13 losing trades. But here's the thing, even though the student here would have 10, 20 or 30 more losing trades, the student would make over $1,000 here. And it's all thanks to the money management. You can see here traded, right? The trader here was losing $25, but made here $124. And this is the risk reward ratio. We're going through everything. Majority of this topic here in this video will be something I hope that you can use this for yourself. That means the first step when we start trading is, where do we see the market is going at? Couple of examples, and I hope that you maybe want to do this for your trading, is that you first look at the market. As you can see here on the right side, we start trading. Do we see the market is going up or down? And here you see clearly that the market is structuring higher. This is the one-day VWAP, the volume weighted average price. It's just an average price that is being calculated starting 0 a.m. And you can see how the price of the market is rising, how lots of candles, right? The market is structuring here higher. That means the trader here assumes also that the market is going to this bigger structure high here, right? Here up here, then here to this bigger structure low here, or even fully down here. So in general, it would even make more sense, right? That the market in general over the next maybe days wants to go to these structures here than just like down there, because as you see here, the market is structuring high, right? It's also something that's very nice under this bluish line. So after that, you first make these thoughts within the first 5 minutes, and then you can see how the market really was reaching almost for this red line, but was going here for this bigger structure high here on the left side. And if that's the case and you do this over and over again, then you're building a relationship to the market. And this is something what's really awesome. Like here you see the market is wiggling around a lot. You have your consolidation phase. It's a bit hard to identify here where the market likes to go at. And then the market doesn't do that, right? And then you have here a day again here wiggling around, but then here the market was structuring lower. And the difference between these days here, if you look at the blue line here, the blue line here was going higher, right? That's why the market was going higher. Here you can see the blue line is a bit stiff and then was going here a bit lower, right? And that's also one of the reasons, if you see this average price that it's going down, you can see here how the market really went also from here above this blue line from here to here lower, and really also went down here. So with enough leverage, this could be literally a $3,000 or even a $10,000 move in potential. Now it's all about how many times are we able to see in this one move, when the trader starts here trading where this black line is, that we can adjust $100 to make $500. So you can see it here one time, 2 times, right? So there were just 2 opportunities if we say like we trade color switches, because in total and with the trading strategy, it's all about seeing in what direction the market is going and then seeing the same signals over and over again. And when it's just color switches, you can see here, for example, this color switch in green and a red candle had a couple of green candles before. This color switch, a green and a red candle here, was a bit mixed up, right? So they didn't have that much of a quality when it comes to trading. Now here comes this day here, and this is something what is really awesome. The trader here assumed that the market is going lower. Then you can see here how the market did here really a long length up, right? So the length up was longer, than the length down. But here's also a thing additional. If you see more than 3 green or red candles, this is also showing you market pressure. And it means when you see more than 3 green candles, as you see here, and there's not a single time that the market is doing when it's pressuring up more than 3 red candles in a row. You just see like 1 or 2 or 3 maximum red candles, but not more than that. Like 4 or 5 red candles are not in place. And this shows us that when you read at candles, you may have seen this in books, in the internet, that when you see like something like a higher low, that means a red and a green candle goes here lower. And then the first time the red and the green candle goes here higher is here. So when that happens, just to trade this alone, a color switch can be enough if that occurs. But in other cases, when you see there are like more than 4 red candles here, more than 4 green candles here, this is where the market goes more wiggling around. And then it's important to understand that just because the market is doing now here higher structures in a smaller perspective, not just to trade it. What is here important is we measure what the market does. This means from here to here, is from here to here also. And then we don't read too much what happens here. We need the market, we need to look forward, what is the market doing here? And you see here, the market is doing here a lot of green candles, but the red candles are much more longer, as you can see here, much more in quantity. Like this move just from here to here 2 times, right? Like from here to here and then from here to here. It's just much more stronger. And this was the main reason why the trader was selling here. But I think this is not very, let's just say, beginner friendly, because if you look at the last 10 candles, they're just here more green than red, right? So what is better is, as you see now, the market was, the first time the market was doing again more than 3 green candles was here with 2 red candles in between, and then did here a lot of green candles again. So starting here on the right side, what you see here is that the market is structuring more higher with length, and the length down is just really less, right? I'm going to draw this to you just as an example. From here to here is the length down, and the length up is just much more longer, as you see from here to here, for example, right? These lengths are longer, and this is something what is an advantage. You see also more green than red candles, and you can see here the T3. There's also here an A1, actually, like an analysis trade. That means you have here red and a green candle, adjusted $100 until here it's 500, adjusted here $100 until here it's 500. Sadly, this one would have resulted in a stop loss. Why? Because we need to keep the stop always where the red and the green candle is, under the green candle here where my mouse is, and the entry is right here where my mouse is. And when adjusting here $100, that means always this length would be $100 in making money, but against it, if we buy, of course, then we would lose here $100. We can also do the same with the green and a red candle for selling, but in this example, we're doing this buying example. So you can see here a red and a green candle. The trader enters the trade here after the candle closes. There's a timer, counts down within 60 seconds always. Stop placement is down here, adjusted $100. This is a $500 trade. But in this case, and this was February 11, we're going to look at this one also in this Excel sheet that I just presented here. You can see here, this was here February 11. The trader is from Europe and trades between like here you see like 6 p.m. to 8 p.m. If you're from the US or Canada, it's going to be 9 a.m. to 4 p.m. ish, around there, 1 or 2 hours free selectable. And you can see here how the trader traded and had here a $120 trade. And the last one was a $30 losing trade, right? Like that's what you can see here. It's like what is traded. The analysis one is just what we analyze and read, but it says you traded $40 loss, traded $95 win, traded $120 made, traded $30 loss. And so this is the $120 made trade. And then afterwards, the trader was trading again, as you can see here, but lost $30. And that's something what's very important when it comes to this. It's a very big money-making activity with the money management, is that also you look also, the first one is really the money management with the tight stop placement. When you have more green than red candles here, it's more nicer to trade T3 than, for example, a bit T4, because it's also, you have a couple of green candles, but it's just not pushy as I just showed you from here to there, right? Like this is something what's missing. And then when you look now out, the main target is always bigger structure highs and lows. So this was the bigger structure high, what I showed you in the beginning of this video. And down there was a bigger structure low, right? And this is something what's really important. I showed it to you on another day, by the way. And the market is over and over doing it again because it's an auction process. The market just wants to understand, does the market wants to go to the bigger structure high or low? And there will be, of course, days or even weeks where the market is not reaching anything from the bigger structures, just smaller structures of highs and lows the whole time. And the target is not to understand every day to trade or like to understand every day. You try, of course, to learn from the market, but it's more if you trade for 1 or 2 hours between Monday and Fridays, let's just say 2 or 3 times an average a week, and you see, as you can see here, 35 trades what the person took and 32 trading opportunities. So you can see here 60, minimum 50, even though if it would be just 20. The second page is by the way here, right? Like here are the others ones, so they add up. If you see like 20 opportunities where you can put $100 in to make 500, or in this case even start with $10 or $30 to make like 150, 375, just that the money management it fits, and it's all a color switch as you see here. Sometimes it's with these with this Anchor VWAP that I'm presenting, is this average price or the one-day VWAP, but usually just these pullbacks. It's a trend-based strategy. Then you don't need to have a second market. You don't need to trade another indicator. It's just like if you sit down for 1 or 2 hours and 2 times a week, and you can see 30 to 50 trading opportunities to adjust $100 to make $500, and you could even start with a not real money account, then I think it's all about which of these quantity are the good ones. And this is just what we just talked about, is like, where do we have more green and red candles? Where do we see exactly, and this is the number one thing, that the market is going to this bigger structure high or low. Hope you could take something out of this video. Wish you all love, good trades, JT out.